Hello and welcome back, students. Now, in today's class, we would be studying about the next topic of the financial statements of a company, that is the statement of profit and loss. So, in the earlier video, we studied the full format of the balance sheet as per the Companies Act. Now, today we will be studying about the format of statement of profit and loss as per the Companies Act again. Okay. So, as we all know that in the final accounts, we have to prepare three of the items. The first one was the trading account. The second was the profit and loss account, and the last was the balance sheet. Now, what is happening is, earlier when we used to make two of the accounts to calculate the profits, now in the Companies Act, we only have to make one of the statement, that is statement of profit and loss. There is no bifurcation for the gross profit nor for the net profit. Only one simple profit will be calculated in this one. Earlier, the trading account was concerned with the factory. All the expenses which related to the factory, the manufacturing hub, all those were recorded in the trading account, and all the office expenses were recorded in the profit and loss account. Now, everything would be recorded in the statement of profit and loss itself. Okay, so earlier it was a horizontal format where we used to record the expenses on the debit side and incomes on the credit side. Now, what is happening is, in this one, it is a vertical format. Now, what is the meaning of vertical format? Here, it won't be any of the two sides. There won't be any debit or credit. It will only be the full-fledged top to bottom approach, where the first thing which will appear is the incomes, and after that we will deduct all the expenses and we will get the profits. Okay, so let's begin with the statement of profit and loss. So the first item, now before that, let me just tell you the format. It is basically the serial number. A small column for the serial number would be made. After that, a column for the particulars. After that, the note numbers column, then a current year's amount and the previous year's amount. So it is same as we studied for the balance sheet of the company. Okay, the format is just the same. Now, starting with the first thing which we have to write is the incomes. Now, can you please tell me exactly what are the main incomes of the business? What are those? So, incomes of the business, the main income is the sales, the amount we earn by selling the goods, products or services. So that's why the first item that will appear with the Roman number 1 will be your revenue from operations. Okay. Now, what is the meaning of revenue from operations? Revenue from operations is the same thing as we studied in the 11th grade, that is the sales. The net sales is basically the revenue from operations, but the name has been changed. In the Companies Act, we do not write the word sales, but we denote it with the word revenue from operations. Clear? Now, if this is very much clear to you, so under your revenue from operations, so what we'll be doing in this class is, we would be studying the items which will appear in the statement of profit and loss, and along with that, the notes to accounts items as well. Obviously, after every statement, that is, be it your balance sheet or statement of profit and loss, we have to make the notes to accounts as well. In the notes to accounts, all the items appear which are under the head of these things. That is, for example, if I take an example for revenue from operations, so all the items which are there under the head of revenue from operations will be written in the notes to accounts separately, because the format of statement of profit and loss is just the exact one which we will be studying. Nothing can be added or subtracted from this particular format. The format is same, but if there are any of the items which can be appeared under the different heads, so for that we have to make the notes to accounts. So the first item which we studied is the revenue from operations. So it will have Roman number 1, and in the notes to accounts we will write number 1, and under the notes to accounts heading, the items which would appear for revenue from operations would be, the first one will be the cash sales, second one would be the credit sales, and the third will be the less sales return. So these are the three items which would appear under the revenue from operations. Okay, now we will have to add up all the three, that is, we will add cash sales plus credit sales, and we will deduct the sales return, because we have to calculate the net revenue from operation, that is the net sales. So net simply means that the returns part, the return outward part, the return inward part shall be deducted from that particular sales. So obviously the sales can be done in two ways. It can be done in the cash form also, or else it can also be done in the form of credit basis. So these both make up to the revenue from operations. Clear? So these were the three items which would appear under the revenue from operations. Now, after writing down the amount, after totaling these, all the three amounts, then the net amount would be written in the statement of profit and loss. So this was the first item under your statement of profit and loss. Now, the Roman number 2, the second item which would appear under the statement of profit and loss is your other incomes. Now, as we used to write by rent received, by discount received, by interest received in our profit and loss account, this time in this, there is no different amounts will appear. Directly the main head with the name other incomes would appear, and all the other incomes, like I just told you, will appear under your notes to accounts. Okay. So the second item is your other incomes and would be represented by the note number 2. And when we go to the note number 2 of the same, we will write all the incomes apart from the sales. So what can be those? So it can be the rent received, it can be the interest received, it can be the discount received, it can be the dividend received, it can be the profit on sale of asset, it can be the miscellaneous incomes. So all the incomes which we can imagine would be appearing under the other incomes head. Okay, so these were some of the examples for the other incomes. Now, if this is very much clear to you, with this, we have completed the second item and the notes to accounts associated with the other incomes. Now, the net amount, that is after adding all these amounts, the net amount would be appearing under your, that is with the name other incomes in your statement of profit and loss. Now, let's move on to the third one. Now, the third one is basically the total income or the total revenue. The ultimate income which we have earned during the year from by adding both of the above two Roman numbers. The first one was your revenue from operations. That would be added with the other income. So we will get the total income or total revenue. Okay. Now, this was the third one. So finally, we have got the full amount which we have earned during the year. Now, next, from the next one, that is the fourth Roman number, would be starting with the expenses. As I told you, it's a vertical format. The first, we will have to write all the incomes. Next, we will have to write all the expenses associated in the full year. Now, the fourth Roman number will be the expenses, and under your expenses, there are 7 bifurcations. So all the items have to be, written down under these items only. There is no separate head. There is no different expenses like rent paid, interest paid. It is not like that. It is as a whole 7 subheads under which only the items would appear. So let's begin with the first subhead, that is your cost of materials consumed. Now, what is the meaning of cost of material consumed? As with the name, you can see that cost of material consumed simply means that the amount of the amount which we have spent on purchasing the cost of the materials, and apart from that, on processing that material. So it is exactly the cost of the materials which has been consumed, that is the raw material. Here, the material simply means the raw material part. The full amount which we have spent on purchasing the full cost which has been invested for this thing, that is your cost of material consumed. Now the question arises, what would appear under this head? So let's check it out. So this will be accompanied with the note number 3. Now in the notes to accounts, we will go there and we will simply write the heading cost of material consumed. Now just tell me what shall be the cost of material consumed. Obviously, it would start with the opening stock of raw material. Opening stock of raw material, because the raw material which was left out in the previous year as the closing stock would become the opening stock for this particular year. And if it is becoming the opening stock for this particular year, so what will happen now? So we will add this up with the purchases of raw material. So the first one will be the opening stock of raw material. In that, we would be adding the purchases of raw material and we would be deducting minus the closing stock of raw material. So here we discussed only and only about the raw materials part only. Clear? Now after adding these both and deducting the closing stock of raw material, we will get the net amount. That net amount would be written in your statement of profit and loss in front of the cost of materials consumed. Clear? Now the next item, the next subhead under your expenses is the purchases of stock in trade. Purchases of stock in trade. Now the question arises, what is the difference between the raw material and the stock in trade? So let me just explain this first, then I'll come back to the statement of profit and loss. So what happens is, there are 2 types of business concerns. There can be 2 types of business entities. The first one can be the manufacturing concern. Now what is the meaning of a manufacturing concern? Manufacturing concern simply means the concern, the business, the firm which is involved in the production of the goods. Okay, I just repeat, in a manufacturing concern, we will have a factory with us. Now, if we have a factory with us, so all the expenses, that is, all the expenses which are done in the factory are known as the manufacturing expenses. So, the manufacturing concern, what it does, they simply purchase the raw material, and then these goods are processed, then becomes the work in progress, and after the work in progress, the final goods are prepared, are finished goods are prepared. So those are known as the finished goods or the finished products. Okay, so we do not purchase the finished goods directly from the market because we are a manufacturing concern. We simply produce the same. Okay, so this is the thing of your manufacturing concern, where we purchase the raw material, it gets processed, it gets converted into work in progress, then it finally gets converted into the finished goods. Now after this, there can be another business entity as well, that is another business concern, which is the trading concern. Now what is the meaning of a trading concern? Trading concern simply means where we just will be doing the trading part. Now the trading part simply means the buying and selling. Now in this, we would have the showroom or the shop. We would not be manufacturing the goods, but we are simply purchasing and selling the goods in the market to the customers. Like suppose there is a car showroom. It will purchase the car and it sells the car. It doesn't produce the car. Okay, so trading concern, in the trading concern, we do not purchase the raw material, but what do we purchase then? We purchase the finished products, okay, from the factories. So that's why the goods which we purchase from the factories are known as the stock in trade. The goods in trade as in which would be purchased and sold to the customers. So these are the two types of business entities. So that's why the raw materials which we purchase, as the first item which was there, that was the cost of materials consumed, that basically relates to the manufacturing concern, the factory. Now the second which we studied about the stock in trade, the purchase of stock in trade, is basically for the trading concern mainly. Okay, I hope this is very much clear to you. Now under the notes to accounts of purchase of stock in trade, again there will be items. The first one is the cash purchases. Obviously the purchases can happen in the form of cash, or else the purchase can also happen in the form of credit as well, as we can sell the goods in cash and credit. Same ways the goods can also be purchased in the cash form or the credit form. Clear? Now if this is very much clear to you, so under this there would be the cash purchases of stock in trade. Next it will be added with the credit purchases of stock in trade, and we will deduct from this the purchases return, that is the return outward would be deducted from this particular two items, and the net amount which will appear will be written in the statement of profit and loss with the name purchase of stock in trade. Clear? So with this we have finished off, we have completed the second subhead as well. Now you must be thinking about that when we were purchasing the raw material, we had written the opening stock of raw materials as well and the closing stock of raw materials as well. But why not in the stock in trade? So the opening and closing of stock in trade would appear in the third subhead, which is known as changes in inventories. Changes in inventories of. Now, as I told you, we can have different types of inventories. The first one can be the raw material. Second one can be the stock in trade. And there are two more. Now, what are those two more? The two more are basically the work in progress. As I told you, in the manufacturing concern, the raw materials are purchased, then those are converted into the work in progress, then after that those are processed and again converted into the finished goods. So we can have the opening and the closing stock of work in progress and the finished goods as well. Okay, so the remaining three, that is the stock in trade, work in progress and finished goods, the opening and closing would appear under the changes in stock, changes in inventories of work in progress, finished goods and stock in trade, as we have already dealt with the items of opening and closing that were concerned for the raw material. Okay, now so under this head, that is the third item, which the third subhead which appears under expenses, is basically the changes in inventories. And under the changes in inventories notes to accounts, there would be two items. It would, the first one will be the opening stock of work in progress, finished goods and stock in trade, and from this we would simply deduct the closing stock of work in progress, finished goods and stock in trade. Okay, so from the opening we would deduct the closing, and the amount which we get after deducting this amount, so that would appear under your statement of profit and loss in front of changes in inventories subhead. Clear? So with this we have completed the third subhead as well, which appears under your expenses head. Now after this, now we have completed everything which was related to the goods. Now we'll come to the next one. The next is, obviously we would not produce the goods by our own. Obviously we will hire some of the laborers, or else we would not sell the goods by our own. We would hire some of the employees. So the next expense which is coming up is basically the employees benefit expenses. All the expenses, all the amount which we pay to our employees, to our laborers, to our workers, would appear under this head only. As I just told you that there is no bifurcation, there is no difference between the trading and profit and loss as compared to the Companies Act. So that's why all the expenses, be it wages, so under your this thing, what all items will appear in the notes to accounts? The first one is the wages we pay to the laborers. Next, the salaries we pay to the employees. Third can be the bonus which we are paying to the employees, the commission which we are paying to the employees. So these all are the expenses which are in benefit to the employees, to the workers who work for us in the business. Okay, so these would appear under this head, and the total of these all will be written in the statement of profit and loss under the head of expenses in front of employees benefit expenses. Okay, so with this we have completed the fourth subhead as well. Now we are remaining with the three subheads. As I told you, there are only 7 subheads. Okay, so the fifth one is the depreciation and amortization. Obviously this is also an expense. So depreciation is basically the amount, the fall in the value of an asset, that is the tangible assets. And when I talk about the amortization, amortization is the fall in the value of the intangible assets which cannot be seen nor touched. Okay, so depreciation and amortization has got a simple one subhead. So under the notes to accounts of this, there would be the depreciation which would be charged on the building, machineries, furniture, vehicles, etc. Okay, and also the amortization which would be charged on the softwares, patents, trademarks, copyrights. Okay, so this is basically the head of depreciation and amortization, and both these amount, after adding both these amounts, the amount which we get, the net amount, would be written in front of the depreciation and amortization. So with this we have completed the fifth subhead. Okay, now the next subhead under your expenses, the sixth subhead, is basically your finance cost. Now what is the meaning of finance cost? What is the meaning of finance? Finance simply means the money, the amount which is required by the business. So it takes it from by taking out the loans. So the loan amount, the amount of loan which we take from the bank or from the public, and the interest which we pay upon that, because it is basically the finance cost, the cost which we are incurring to have that particular money, to have that finance. So if we take a loan from the bank, so we would pay what? We would pay the interest. If we take a loan from the public, that is in the form of public deposits and debentures, so we will again pay the interest, or else the bank overdraft facility which has been availed from the bank, the interest upon that. So these are basically the costs which are incurred in order to get the finances. Clear? So under your notes to accounts, that is under the finance cost, the items of interest would appear, the interest which we pay on the bank loan, public deposits, debentures, bank overdraft, cash credit limit, these all. And after adding these all items, the net amount which would appear would be written in front of the finance cost under this main head of expenses. Clear? Now, if this is very much clear to you, so this was the sixth item. Now let's come on to the last, that is the seventh item of the expenses. Now all the expenses which are left out are written under the subhead of other expenses. Yes, the name of the seventh item is your other expenses. Clear? So now those all expenses which have not found any of the space, any of the space under these above subheads, that is 6 subheads, would appear under this column only. So those are basically the advertisement expense, the rent expense, the carriage, the transportation, the cartage, fuel and power, conveyance. All the expenses which you can think of would appear under this head only. This is the last head of other expenses, where all the expenses which were not able to find space in the above 6 will appear under this head only in your notes to accounts. Now after adding all the expenses under the other expenses, the amount will be written under the expenses main head in front of other expenses. So finally, with this we have completed the 4th Roman number as well, that was the expenses. Now after this we would do the totaling of all the expenses. All the 7 expenses will be totaled and after that we would write the total expenses. The amount of all the expenses would appear in front of the total expenses. Okay, so in the Roman number 3 we had written all the incomes of the business, and under the Roman number 4 with the total expenses we have written all the expenses. Now the next Roman number 5 is the ultimate thing which we wanted, for which we are making this statement of profit and loss, that is the ultimate profit. Clear? So after this, the Roman number 5 would be the profit before tax. Now the profit before tax would be calculated by deducting all the expenses, the total of expenses from the total of incomes. That is Roman number 3 minus Roman number 4, we would get the profit before tax. Okay, and why are we writing the profit before tax? Because till now we have not deducted the tax amount. Obviously the tax expense has not been deducted so far. In the other expenses there is no item as such, that is the other taxes payment. Okay, so the tax would not appear here. So that's why this is the amount of the profit which we have earned, that is before deduction of the taxes. Okay, now after this we will deduct the taxes and we will get the amount of profit after tax. Clear? I hope this is very much clear to you. So with this we have come to the profit after tax, and after that we would be deducting more of the expenses. Yes, exactly, there are more expenses which will be deducted from this profit after tax as well. So let's do it this also. The next item which is to be deducted from this profit after tax is basically the amount of dividends. Obviously this is the profit which a company has earned after deduction of the taxes as well. Okay, now from this, obviously this is the ultimate profit which a firm, what the company has earned. From this we will deduct the amount of dividend which we have to pay to the owners of the company. So there are two types of owners of the company. The first one are the equity shareholders. The second one are the preference shareholders. So preference shareholders have the preference over the equity shareholders in the terms of dividends. So first of all, from the profit after tax, we would deduct the preference dividend, the dividend which has to be given to the preference shares. Clear? And after deducting this amount, we will get the next amount, that is profits available for the equity shareholders, or else the earnings available for the equity shareholders. Okay, this is basically the at the end amount which is being given to the equity shareholders, the main core owners of the company. Okay, so from this we will deduct the equity dividend, the dividends which are paid to the equity shareholders. Okay, and if at all, now what happens is sometimes the company doesn't pay the full amount to the equity shareholders. It holds on the amount into the company itself. That is basically the amount which is retained by the company, that is known as the retained earnings. Okay, so after deducting the equity dividend from the amount available to be given to the equity shareholders, the amount left after that is basically known as the retained earnings, or else the surplus available in the statement of profit and loss. Clear? So this was the full statement of profit and loss. So this was the full statement of profit and loss which we studied now. So at the end we have calculated the profit also, and also we have calculated the surplus. Now if this is very much clear to you, so now let me just introduce you with one of the more concept, that is basically the profit before interest and tax. Now when we deducted all the expenses from all the incomes, we got the amount as profit before tax. Am I correct? Now what is the concept of profit before interest and tax? Now if at all, from the expenses, if we exclude the finance cost, as I told you in the expenses section, in the expenses head, there are 7 main subheads. Now if from those 7 subheads, if we exclude the finance cost, then the profit which we would get will be known as the profit before interest and tax, because the finance cost is basically the interest on long-term borrowings. And if at all we are not deducting that as an expense from our incomes, the profit which we will get will be the profit from which the interest and the tax has to be deducted. Okay, so profit before interest and tax is basically calculated by deducting all the expenses but excluding the finance cost. Okay, and from the profit before interest and tax, if we deduct the finance cost, then after that we can get the profit before tax, and after that, after deducting the tax expenses, we can get the profit after tax as well. So the question is, why am I telling you these all things? These I'm telling you because this will be helpful in calculation of the ratios, because we have to calculate the interest coverage ratio where we need to have the profit before interest and tax, or else sometimes we also calculate the ROI, that is the return on investment. Then also the formula, in the formula we have to use the profit before interest and tax. Clear? That's why I just told you this, so that when you calculate the ratios, you don't have any confusion as to how do we calculate the profit before interest and tax. Clear? So this was the scenario of your statement of profit and loss, and I hope you have understood all the heads, all the subheads, and all the figures, all the items which appear under the notes to accounts head of all the different items. Clear? Thank you so much.